really wondering is this over? Is this correction over? Did we bottom? And the short answer to this is yes, I believe that we did, and we're going to get into that. We're going to get into the indexes. We're going to get into the indicators that are telling me that we have bottomed. And I think it's really important to understand why I'm saying this, but also by learning this, you could see if I'm wrong. So in other words, if certain things start reversing, it might be indications that it's not over, but we're definitely going to need some consolidation here. So this is extremely timely. Consider subscribing to the channel, clicking the notifications button as well, because what we're about to go over, I think, can greatly help you improve your performance. And at the end of this video, I'm not going to put it all in together, but at the end of this video, I'm going to give you a list of 10 ideas, top 10 ideas. There'll be another video that'll link it all together on where I think that you should be looking at putting your money. So let's just really start by getting into this. To start with, the entire move of this and what's been happening here is this. I mean, this is what has been causing all the havoc. And this is the 10-year Treasury. Okay, and what's happening here is this is going up because of inflation concerns. So I think that's really important to understand what's going on and why this is happening. Let's get rid of this gray. I don't really want to watch it gray. Make it white, and we'll get rid of the background. Okay, so what you're seeing is, and this is the weekly chart of it, we have the line drawn, and you can see how we broke the downward trend and we triggered at the $1. And then you have a little consolidation pattern wedge, and then boom, you broke out. So when you see things like this and you run through them, you got to start looking for resistance lines. Well, if you go back to here, which is what we did, we went all the way back to here, you could see this was a resistance point, right? And what transpired was we flipped it for a little bit, and then we rejected and closed right on it. So one of the reasons that you could be looking at and determine if this is, oh, here we are, we already had it. So one of the things that you could be looking at and determining if we aren't done is if this rate accelerates and we get to this $2 range. I don't think that's going to happen, and we'll get into more charts on why I think that's not going to happen. But if we look at that, and then we look at what transpired on Monday with this, look at this reversal. I mean, that's a key reversal bar, right? You see how we're up at the high, we opened here, we closed below this level, and right on this support. This is setting up to at least come down to here. Now, a 10 basis point move on the Treasury is going to accelerate what's going on in the NASDAQ, but that doesn't mean we're going straight back up, and we'll get into that as well. But that's the 10-year, and you need to be looking at this, and you need to be paying attention to it. The symbol on this, depending upon what system you use, is TNX or $TNX. So let's just keep drilling down to some of these others that are really, really poignant. So this is the VIX, okay, and this VIX is just in the symbol is VXX. But what you need to understand about this is we're not even, here's the pandemic levels, okay? Here's what happened in February. This is what we're dealing with now. And look at all the buying that's going on here, and we're not even moving it. That clearly shows this is not institutions looking for a hedge. And why they buy the VIX, why large institutions buy the VIX, and why we care about what large institutions do is because they control the market. They move the market with their supply and demand. So what you can see here, you see how you have just this downward trend line, like literally the whole way? I mean, it's insanity, right? You have a little pop over here. Looks like it might get higher. But really, you're still at this 15 level. Nothing's changed. When the NASDAQ is going to drop, and let's say it's going to drop 10%, okay? This is almost like trading 3-to-1 volatility on the moves that it will have. For example, if you go back and look what happened in March during pandemic, you're buying this at 16, you're getting out at, I don't know, you're not going to get out the high, but you understand where I'm going with this. I mean, when the market plummets, this exacerbates if people want to play it. For example, in 3 weeks, people would have made 336% on their money had they bought the VIX, and institutions did. They're not doing that here. So it's very clear that they don't believe that this is going to continue, or they'd be putting their money and hedging themselves to make money against their positions. And that's not transpiring. And this is the short-term futures VIX, which is Let me put the symbol in here because this is important. VXX. Okay, and this is VXN, which is the NASDAQ 100 weekly, and I'll throw this one in. And you can see here again, and I'm doing this to hammer a point. Okay, here's where you were during pandemic levels. And we'll show, we're going to get into another chart in a moment, and it's going to show why this is important for you to understand. The differentiation between this is a 370% move, and yeah, we haven't even broken the downward trend line, have we? I mean, look at these levels. We're not even close to them. So that's really important to understand, right? Look at this. Like, we're not going anywhere. And yet, look at the move the NASDAQ has, but we're going to get into that. So this is really important. If this does not match what we're dealing with, then something is seriously off. And I think that we're starting to understand that. Now, this is interest rate volatility. Okay, and let me drill to this. And the symbol on this is $SRVX, at least on TrendSpider it is. But this is interest rate volatility, okay? And let's just look at what happened again. Here's the pandemic levels. Here's the level of volatility on what transpired during the same time. Okay, so these two do match. How did we close? We clearly rejected the volatility and sold all the way down by the end of the week. And you could see this greater if we just click on the daily. Look at this. Spike closed at the low on the volatility. As low as you can get it, still be green. So what does this tell you? This tells you this is usually a reversal bar, that we're rejecting this and the volatility is probably over, which means the 10-year could trend higher, and it may, but that means that if the volatility slows, the NASDAQ is going to be okay because it'll be able to digest this a little bit more. And the NASDAQ's the one you're worried about because the NASDAQ's leading what's happening right now. The NASDAQ is tech-laden, biotech-laden, and so therefore they are more tied based upon their leverage to the 10-year than anything else. So that's really where you're at. And you're going through an inflationary time, as I said, and in the newsletter that I put out, this is lumber. And just to kind of put it in perspective, let's go take a weekly look at lumber. Right? And again, this was in the newsletter that we talked about this. And if you don't get the newsletter, there's a link in the descriptions and in the banner page. And it's free. Comes out 3 times a week, and we go through stock ideas, index ideas. But look at this. Boom. Okay. It drops, rallies. We're setting up for a double top. And I know people that are more tech savvy are going to tell me, oh, well, it's not a double top until you break this. I'm not waiting for a 100% drop for the technical term. I'm more interested in making money. So you see how you're topping out here on lumber? Now, does that mean that we're not going to go higher? No, we could. We could be in an inflationary environment, but it sure as heck means it's slowing down. And that's really what we're looking for. And the symbol on this is LB*1. And I'll throw that in here for people that want to see this. And there we are. Oops, that's not going to work. There you go. So this helps you chart lumber. And as I stated, we've been talking about this in the index for a while. But now let's get into the indexes and let's see what's going on. But before we even do that, let's drill down into a sector so we can see. Now, on Twitter, I called this on Friday. And I essentially said, I'm putting a trade on here. And we'll get into where I did that and why I did that. But so we called this here, but let's just go through these lines because this is pretty significant stuff. So notice this 32.27 level. Notice how you open there, right? And they do this to us all the time. They open us on a level and go, oh, we're going to be okay. And then they rip it down. And that's exactly what happened here. Look at this green hammer. This is about as bullish as you could get for a key reversal bar. If you were to look at this in a book, this is what you'd want to see. And now we can go back up to here, 36, and still be under the channel. So this is set to bounce. Now, I did say that I would explain why I looked at this, and we're going to drill down into this deeper and deeper. But let's just get into this for a moment. So you see I had that trend line drawn, right, on the daily? Let's get into this. Maybe we can do it on the hourly. That might be better. You see this? See how we hit this level? and then we reversed. This was pretty clear stuff. And so what you can do for it is you can drill down in it a little bit. And I have this line drawn. I don't know how far it goes back. It goes back to here. Let's see how much further we go with it. So we go back to this point here, and I just didn't draw it. But you follow this yellow downward trend line. And then at the same time, we hit an old stop or support. Well, all I'm doing now is drilling down looking for the trigger. That's all I'm looking for here. Because if it breaks, this is my stop. If I break this trend line, it means we're going lower. So this gives me a low risk entry. And you can drill down into a 5-minute look at it. And you can drill, and I mean, here you are, right? Or you can drill down into a 1-minute and look at it. Okay? And when you're in this kind of environment, I would strongly suggest using smaller time frames. When you're this volatile, every minute counts. And you can see this, right? You can see this line. And right here we flipped. And I think I'm in at like 28.25. I think I waited for it to get above this. And you can look on Twitter and follow me on Twitter because I do give actionable trades and the links in the descriptions. But you see what's going on here? And then you flip, and then we went. There was nothing to do with this trade. This was your stop. So I'm risking $1, and I think I'm up $4 on it. You know, and I'll figure out what to do when I get to 5-to-1. But look at what's transpiring here, right? Look at what's transpiring here. We're heading towards this, okay? Could we consolidate for a little bit? Yes. Are we going to break this hammer bar on the way down? No. Could it happen? Sure. As I always say, Mark Douglas says, anything could happen. My bet is that this does not happen. Now, let's just keep on going here and really get into this, because the strongest index has been the SPY, and this is writing from the newsletter. And what I stated was on Thursday in the newsletter that we were getting close to the bottom. And I was trying to be emphatic with it, but still tell you to understand that it's probably better to trade the indexes with ETFs, and we'll get into that too. So you can see here how on the Bollinger Band, we broke through it. It's just too much too fast. And now we cut through it, and guess what? We're back in them. And you're back above that 50-day now, right? So you've reclaimed that, and now we're heading to this 20-21 day, and that'll be right along the lines with the median Bollinger Band line, which is usually a 20-day, because this is a 2.0 standard deviation. So you can see what's going on here, but that gives us a 388 target, and then we'll go from there. But you should be able to see this, and let's get rid of all this for a minute. You should be able to see this, and if you can't, that's fine. You have a wedge here, and you have another one right here now. So you break this, you could be going to this level. You could be going to like 390 and testing that. And we just look at support levels like this just to give us an idea. And if we really want to see what the wedge looks like, you always clone your lines, because by cloning them, you get the same trajectory on both lines, and that shows you where your points are. So I think this is a pretty strong bottom that we didn't break down through this wedge. We didn't take out this lower low on the SPY. And I think that this is setting up to go higher. And again, at the end of this video, there'll be another one, and I just want to break it up. We'll go over at least 10 stocks that I think that have the potential for big rallies. Here's QQQ, right? And we'll look at this, and we can look at the NASDAQ as well. But let's just look at this for a minute, because this is really where you could trade. Here was the lower trend line, and you see how you broke it here? And this is why I'm saying to you, when you reverse this strongly, okay, when you reverse this strongly, it's a clear indication. See this right here? I shouldn't even have to draw it, but I will for a moment. We'll just clip it right here. Bonk, 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 bonk. Okay. So, I might even go all the way up to here. So you can see this, right? And as we hit this, and we hold this line, we're looking for this. But this is a classic sell down. Here's your reversal, and this was our trigger to go long. And if you now you overlay some of the bells and whistles, and you'll see the volume coming in, but it's nowhere near as great as this, which is obviously capitulation at this point, right? You can see that that's capitulation and selling. So that's really what's going on here. And if you drill down into the NASDAQ and just want to look at that for a moment, you can see what transpired here. You ran right to this upper trend line. And we've been talking about this 311 line forever in the newsletter. And we broke it. And now we have to get back through it. And this was the first day. I want to point this out. These were all key levels that were in the newsletter, but here's what's interesting. This is the first day. Friday was the first day that we broke onto the upside and flipped a resistance to a support. It's the first time. It hasn't happened in 2 weeks. So I think it's really important to note that, and that signifies a change. It's another reason why I think we bottomed. So by looking at that, it gives you a better understanding of it. And let's just run through this really quickly so you can see what's going on here. This is IWM, and this is the Russell 2000. You can see how we broke down here. Look at this hammer bar, and let's get rid of these indicators for a moment. Look at this hammer bar. We couldn't even get to the 205 level. Look how strong this is. And it ran right to that 218.18 level that we're always talking about. And now we're setting up. If we have a continuation gap, which I think that we do this week, people are going to be scrambling to get back in positions. And we talk about these boomerang trades all the time, right? When you undercut a support and then bounce straight through it. So that's it in a nutshell. If you find this helpful, please click the like button, because I'm trying to get as many people educated on what it truly takes to be a consistently profitable trader. And at the end of this video, it's going to be a new video that's going to list 10 stocks at least that I think can move next week. Thank you very much for your time.